You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 4th of April, 2016. We always start with IYY, which is a total market index fund put out by iShares. It tracks the entire market. It's an exchange-traded fund. And we're looking at our weekly chart. We'll go from the weekly to the daily on all three indexes. That's IYY, the total market, SPY, the S&P 500, and QQQ, the NASDAQ 100. Then we'll look at gold. Then we'll talk about events that affected the market over the last week and what might affect the market over the coming week. So let's jump right into things. As promised, first thing we look at, IYY, total market index fund, crossed over on the weekly chart, going up on the 4th of March. We've seen green candles since then. Looks like it could be slowing a little bit over the last couple of weeks, but hard to tell. MACD continues to diverge from the red signal line, and the derivative oscillator continues to get longer as the market goes higher. You might say, why is the market doing what the market's doing? I couldn't tell you, but I'm just looking at the charts and can see what's happening with it. That's why it's so important to learn the charts, because you can think any number of things. You can have any number of ideas. You can have all sorts of technical knowledge about finance and any number of other things going on. But if you can't read a stock chart, you don't know when to get in or get out of the market. The last thing you want to do is catch a falling knife. You do not want to buy high. You do not want to sell low. You want to do the opposite. You want to sell when the price is high before it goes down and buy when the price is low. That's what's so great about learning to read a chart. So we know the market's continued in an up pattern. Let's glance back over the course of the last week on the daily chart to see what's been happening in the total market. Market opened last week on the 28th. It was coming off really 3 down days on the prior week. Market was not up a great deal that first day on the 28th, but moved up on Tuesday the 29th, surged up on Wednesday, and then slid sideways throughout the course of the rest of the week. Friday was an up day for the total market. Now, when you look at the kind of candlesticks that we use the Heikin Ashi type candlesticks. It's not the high-low open close candlestick. It's put together differently. You can find more about it at our website. You can also find more about it if you end up going to Investopedia or just look up Heikin Ashi. And the reason we use that is because it helps us so much more in seeing what's really going on with the price in the way that those values are put together, and the week actually ended with a spinning top on the daily chart. Daily chart is still not crossed over going up, although the derivative oscillator did cross over going up on Friday, had been losing down energy, actually we'd call that gaining energy, as the week progressed until it moved into the green, which is a good portent of what might happen on Monday as far as price movement goes. Still above the 2-day trend line on that 1-day chart. Now let's move back to our weekly chart. Let's take a look at the S&P 500 via SPY, an exchange-traded fund. It crossed over going up back on the 4th of March and has continued to move up since then, ending the week up. We also see the derivative oscillator continuing to move up and the MACD and the signal line continuing to diverge, that is move apart, which is a good sign for continued up movement. Now let's look at what happened over the course of the week. The week opened, of course, on the 28th. That was a day where the market moved up a little. That did that throughout the beginning of the week. On Monday, Tuesday, and Wednesday, as far as the kind of candlesticks we have, then slipped sideways with a spinning top ending the week. Derivative oscillator rotated over. Still on a confirmed down move, though, not a crossing yet going up on the MACD, although the derivative oscillator now has 2 days of up movement. So at some point, the MACD ought to move in that direction. Market on Friday was up, as far as the S&P 500 goes, 0.68%. The prior chart we looked at, the total market up 0.61%. Now let's take a look on the weekly chart as to what's going on the Qs. And of course, we're in up trades on S&P 500 and the Qs based upon what happened on our daily review. If you haven't been paying attention to that, you probably want to, as far as our virtual trades go. Now, what do we see going on the Qs? Well, it crossed over later than the other two charts going up on the weekly. It crossed over on the 11th, or really the 18th. It's continued to build. Actually started going up back on the 19th of February, but we didn't have our confirmed crossover on the MACD until around the 11th of March, and has continued to move up, actually surged up at the end of the week on Friday 1.06%. The MACD and the signal line diverging, derivative oscillator continuing to gain energy. If we look at the daily chart, what do we see happening? Well, we saw the week open, again in the green across the board on derivative oscillator, crossed over on the daily chart on the 29th, actually the 30th Wednesday, going up, slid sideways at the beginning of the week, and then on Tuesday and particularly Wednesday started moving up for the rest of the week. As far as the Hikinashi type candlesticks, gives you the appearance of it sliding sideways, which it pretty much did after that big upsurge on Wednesday, where we had a crossing on our short chart, and the daily chart's very close to what we saw on the 4-hour chart. And there was an input where a number of us jumped into virtual trades and have already seen nice gains in that regard. So that is where we are. We ended the week, like I said, up 0.06%. So we're in confirmed up moves on all, let's see, I believe on all three of our indexes when it comes to the type of trading that we do on the 2-day and the 4-hour chart. So the weekly charts are up on the Qs, the weekly chart and the daily. The daily chart is still down on the S&P 500, but up on the weekly. And on the total market, still down, up on the weekly as far as the daily versus the weekly charts go. Now, lastly, before we jump into the news and such, we're going to go to the weekly chart and look at gold, which was down 0.60% for the day. We have the gold has rolled over. We don't have a crossover going down yet in gold, so technically still in an up move, at least on the weekly chart. Derivative oscillators losing its energy, as is the MACD getting close to the signal line. 3 weeks of down movement on gold. If we look at the daily chart, what do we see going on? Well, the daily chart starting on the 28th, gold actually it made some up moves until the end of the week, with that rollover on Friday down just over 0.5%, 0.6%. So that is where gold is. Gold's in a confirmed down move on the daily chart and still in an up move on the weekly, but it does appear that the price is rolling over, but we don't have confirmation yet on that weekly chart. So continue to pay attention. If you are a gold bug, you may want to watch your position very closely if you've not already exited gold on any virtual trades you might be in. You keep hearing me say the word virtual trade. The reason I say that is we're not a stock calling service. We're an education firm. We do not give you buy and sell advice. We're not paid to do that, and we're not about to do it. All we do is help you learn to trade so that you can make those decisions when you feel appropriate on your own with your own information. Now, let's jump into what all happened over the week. The biggest thing that happened, of course, is that Janet Yellen, the Federal Reserve chairman, or chairperson to be more politically correct, pushed back very forcefully against a bunch of the Federal Open Market Committee members who were calling for an early hike in the federal funds rate, maybe even as early as April. She said, no, the Fed's going to proceed with a great deal of caution due to economic developments across the globe, global financial concerns and such. So the markets are currently pricing in less than one additional rate hike between now and the end of the year. That, again, free money across the board seems to be the main thing that pumps up this market. What else do we see happening? Well, some solid employment numbers have come out. U.S. labor markets continue to maintain its strength. We see in March, we've got an addition allegedly of 215,000 non-payroll jobs. We've seen the job rate rise about 0.1% from 4.9 in February to 5.0 in March. and that is dealing primarily with increase in the participation rate, we're told. When we look at things like China, we see that there are some manufacturing sector recovery is showing some signs. Both China's official government PMI and the Kaizen Manufacturing Index, if that's the way you actually pronounce it. Regardless, those two indexes are showing similar rises in purchasing manufacturers index numbers. So that is good for China and good for much of the rest of the world. U.S. manufacturing sector, that continues to expand. The Institute for Supply Management's Manufacturing Purchasers Index has rebounded nicely. It is up from 49.5% to 51.8. New orders are surging from 51.5 to 58.3. So that is hopefully a sign that production in the future will be up. It's the first time that we've seen an expansion in the last 6 months. So as we look at sort of what came in over the course of the week, we see some fairly decent news that again will hopefully help the market continue to rise because of the trades and the investments that we've already put ourselves into virtually based upon what we saw happening. And what we actually saw directly from the charts. Let's talk about what's going on over the course of the next week. Well, nothing news-wise on Monday, so hopefully we'll continue to see the market move up on Monday unless something terrible happens, God forbid, over the weekend. We have on Tuesday the global non-manufacturing purchasing managers indices are going to be released. That'll be interesting to see. What kind of impact will that have on the market? Well, if it's really, really bad or really, really good, maybe some. Otherwise, not holding my breath on that one. Reserve Bank of Australia is holding a rate-setting meeting on Tuesday. Again, Australia's not a big country, doesn't have a lot of impact on things. If something terrible happened, maybe, but not likely. What's really going to move the market potentially is going to be what happens on Wednesday. The Federal Open Market Committee is going to release its notes, its minutes. They're going to do that on Wednesday, the 6th of April. So depending on what's in those minutes, probably more stuff to back up what Janet Yellen said. So that might be good for the market. Pay attention if you're in any trades or have any money in the market, talking virtually, watch that so that when you actually have real money in, you know what it is to pay attention to and how news from the Fed affects things, because it does. On Wednesday also, China's going to release its foreign reserve exchange data. So that's going to be interesting. Its foreign exchange reserve data is going to be released on Wednesday, the 6th of April. Then toward the end of the week, you're going to see the European Central Bank is going to have its March meeting notes again released. That's going to happen a day after the U.S. Federal Reserve releases its. So the European Central Bank's March meeting accounts are going to be released on Thursday, the 7th of April. And then at the end of the week, Canada is going to release its unemployment data. Don't expect that to move the market a whole bunch. Canada's not a big country when it comes to market moving things. But what we're probably going to see happen is the biggest potential effect on the market's going to be on Wednesday with the Federal Reserve, and then following that, any potential bad things or good things that might come out of the European Central Bank's accounts being released. That is where we are. That's where we've come from, where we might be going to. What's up with all three of the indexes we look at? IYY, the total market, SPY, S&P 500, QQQ, the NASDAQ 100, and GLD Gold. If you would like to know more about trading, more about investing, more about how to read a stock chart, which is so important in investing and or trading, what do you need to do? Well, you need to let us hear from you. Go to chartingwealth.com, sign up for our daily newsletter. Put your first name, email address in the box at the website, and you will get every day our daily review. You'll also get once a week our weekly review, and you'll get 2 added bonuses. You'll get how to read a stock chart video, a link to that. In addition to that, you will receive from us the layout that we use at freestockcharts.com. We thank you so much for being with us. Let us hear from you. We're on YouTube, Twitter, Facebook, Instagram, you name it. We are there for you at chartingwealth.com.